Hello traders, Greg here with a market update. Okay, so yesterday we had the second RBA meeting for the year. And for the second time this year, the RBA did raise rates. So the RBA so far this year has raised rates now by 50 basis points and taken the cash rate up to 4.1%. So the RBA does have the highest cash rate out of all the major central banks globally, and the interest rate differential between the RBA and the other central banks is widening in the RBA's favour. In any case, we did hear from Michelle Bullock, who is the head of the RBA, about why they raised yesterday. And the reason that basically gave was quite simple, was that the current inflation rate warranted a higher cash rate. And obviously the current inflation rate is pushing towards 4%. Also, she did mention that they did not raise rates because of the war or what was happening with crude at the moment. So that is interesting, because obviously what is happening with crude is going to spike inflation. And that basically means that we probably are going to see some more RBA rate hikes in coming months. And the market is already looking at May to be a live meeting for another potential hike. In any case, look, local markets here, Aussie stocks, ASX, and the Aussie dollar really didn't react too much to the rate hike. The rate hike was well priced in. It wasn't a surprise. But look, what the RBA is doing is a massive tailwind for the Aussie. We've talked about this quite a few times. The cash rate for the RBA is widening compared to the other central banks. So if we were not in a war situation at the moment, the Aussie would be trading a lot higher. At the moment, it did close higher after the RBA at around 71 cents. The 2-year highs are around that 71.70. But no doubt, look, we'd be straight through 72 cents with a bullet if risk, the dust settled on the war and risk was bid and back in a happy place. But further out, certainly, if we did put the war behind us, I think Aussie could be trading as high as 75 cents, and certainly it's one of the strongest in the currency space. In any case, there is another big central bank meeting today. That is the Federal Reserve. This is the first time that the Fed is meeting since the war has started, so it's an important meeting. Market pre-war was actually still pricing in a couple of rate cuts for the Fed. You can forget about those. They are not going to happen anymore. But what is going to be interesting is to hear from Powell and the Fed to see how they view what's happening to crude at the moment and what sort of effect they believe that that's going to have on inflation and just how serious they view all of this. Now, what the risk is if Powell does at some stage tonight during his speech or questions actually says that potentially the next move in rates could actually be up if inflation does take a decent spike from this, what's happening with crude. So look, this meeting is not going to be a dovish meeting. Markets generally, obviously, want the Fed to be dovish. So I think for risk markets, I'd be surprised if they don't go lower tonight during the Fed meeting. Also, it should be bullish for the US dollar as well. In any case, we're going to see some volatility, obviously, tonight on the back of the Fed. As far as the war is concerned, the main headline that we really got was from Trump speaking overnight. Basically said that he thinks that he's going to wrap up the war in 2 weeks. The only problem with that is that does Iran agree to his 2 weeks? So look, I'd be surprised if it is wrapped up in 2 weeks. But in any case, he's giving us a timeline. Now, crude oil obviously is a focus. Hasn't been anywhere as near as volatile as what we saw last week. Monday, yes, we did pop up above $100, but it's been trading below $100 ever since. But it is still trading super close to $100. We are seeing, obviously, any dips. The buyers are coming in. And the risk is obviously is that at some stage, for whatever reason, we do start trading back above $100. And if we do target back up and retest those 120 highs, it's not rocket science. That won't be good for risk. But if for whatever reason there are some positive headlines, crude trade's lower, it's going to be great for risk. So we still are all crude traders, and we will be for some time. Lastly, gold, it's sort of been sidelined for a while, but we are trading just above 5,000. Look, it does not like what is happening with crude going up. Obviously, that has got bond yields flying up on the back of inflation fears. We've got central banks hiking rates like the RBA. We've got central banks now that obviously going to lose their dovish bias, like potentially the Fed tonight. And obviously, the stronger US dollar. It's all sort of weighing on gold. So potentially we could see a bit of a move for gold tonight on the back of the Fed. So yes, maybe a cheeky short going into the Fed. In any case, look, a lot going on. Good luck, and we'll check back in with